Your competitors are scared of you. The Morgan AI-powered Lion, the king of closings. This Wednesday at 1 p.m. PST.
Welcome to The Interest. I'm Katie Jensen. Unfortunately, mortgage rates keep climbing with the average 30-year fix now at 6.65%. How long will rates continue to rise? When will the economy stabilize, encouraging lenders to bring rates back down? Our own Sarah Wolak asked an expert.
They're going to come down, and you're going to unleash more buyers on a very tight inventory environment.
Mortgage rates continue to climb, but Barry Habib of MBS Highway says that trend will change. He expects better economic data later this spring, but he also thinks lenders are overreacting to some job numbers.
It's not as good of a picture or as inflationary as a picture as the headlines would lead us to believe.
The Bureau of Labor Statistics says the U.S. economy added 517,000 jobs in January, prompting fears that a tight labor market will continue to drive inflation. But that includes employees who were missed in past data. Payroll company ADP puts the number at 106,000.
On March 10th, the jobs number that we get without all the bullshit will probably be more indicative of a market that's not on fire.
And then there's inflation. The Consumer Price and Producer Consumption Expenditures Indexes showed inflation sticking. But Habib says rent price data, which lags, is pushing up CPI. While medical contracts tend to inflate PCE in January, he expects inflation to cool.
Think that as we see potentially a little weaker jobs number, a little friendlier inflation number, there will be some buying of these securities because of the very attractive nature of the return you can get.
But that doesn't mean rates will cool at an easy pace. According to Freddie Mac, the average rate for the 30-year fixed is now up to 6.65%. Habib thinks we could see some rocky data again in April, and rates won't come down significantly until after May.
It begins a string of what we should see as consistently improving inflation, which the bond market's going to respond to.
When rates do eventually fall, buyers will come back to the market that is woefully undersupplied. Habib says now is the time for buyers to take advantage of the fact that home prices have essentially leveled off.
I think I could take advantage of that today and be the beneficiary of that.
For the Mortgage News Network, I'm Sarah Wolak.
Thanks, Sarah. Rising rates are just one reason that Fitch Ratings says non-qualified mortgages have a higher chance of producing losses. And in hopes of attracting buyers for residential mortgage-backed securities, the industry is shifting to what Fitch describes as affordability products, or non-QM products that bring down monthly payments and are thus less likely to default. Non-QM loans are subject to more regulation after the 2008 crash, but Fitch says in a new report that the combination of high rates and prices are still making some non-QM loans too expensive. 30-year non-QM loans typically have rates that are a point or two higher than conventional loans, and Fitch says they also have a higher risk of default. Fitch also found some companies are shifting to 40-year non-QM loans in hopes of attracting borrowers and security investors at the same time. Coming up, some minority groups are gaining ground on home ownership. We take a look at who's still being left behind.
I don't have to be babysitting my loans. I don't have to be checking on everything. I get to spend more time with my family at the same time as I'm closing more loans. Join Sunwest Mortgage, and you're going to see that for yourself. It's the best experience ever, honestly.
Break free of the matrix of manual loan processing and underwriting. Use Morgan now.
Welcome back. Americans overall are more likely to own a home than they were 10 years ago. And for some groups of people, that's meant closing the homeownership gap. But that progress is still not being felt evenly. Asian and Hispanic households grew their ownership rates between 2011 and 2021. National Association of Realtors says Asian households saw the biggest gain, jumping nearly 5 points to an ownership rate of just under 63% in 2021. Hispanic homeownership grew by 4 points to over 50%. However, Black households saw the smallest gain of the groups surveyed at just half a point to 44%. NAR Deputy Chief Economist Jessica Lautz says Black homebuyers are more likely to be first-time buyers and are more sensitive to mortgage rate changes because they don't have equity they can rely on. A study last week from the Urban Institute did find Black homeownership has increased by 2% in the pandemic, driven by higher educated households with more income. A study last week from the Urban Institute did find Black homeownership has increased by 2% in the pandemic, driven by higher educated households with more income. But even in that study, the Urban Institute says we need to do more to keep that trend going and close the racial homeownership gap. This includes policies like down payment assistance programs for first-time homebuyers and targeting rate buydowns to low-income borrowers. We'll be right back with what else is interesting today. Welcome back. Here's what else is interesting today. Bankruptcy filings are jumping in a sign that households are struggling to keep up with the economy. Epic Bankruptcy says the new bankruptcy filings in February jumped 18%, with increases for both businesses and individual households. That spike in filings comes as inflation pushes prices up, and the Federal Reserve's rate hikes means higher interest rates for credit cards and other debt. Bankruptcies were held down thanks to pandemic relief, but now that the help is over, bankruptcy is becoming a way for households and businesses to restructure their growing debt. For more on these and all of today's top stories, go to mortgagenewsnetwork.com.